Well, Custodia Bank is designed for solvency. There's no leverage on our balance sheet. It's a radically different business model. And to be clear, we're not operating yet. We're on the verge of, but we're not yet operating. Our design is to be non-leveraged. It's the polar opposite of all the mess that I've been warning about for the last few years that is creating the train wreck in this industry. But it's not over yet. Bitcoin is going nowhere. Bitcoin continues to print blocks. There are new blocks being appended every 10 minutes on average, and Bitcoin itself is going to be just fine.
What's it for, though, going forward? Like right now, we talk about a store of value. Even in this inflationary environment, you'd be better off having held dollars for the past several months than, Netflix stock or Bitcoin or. Right. So what does Bitcoin, what do these other cryptocurrencies have to prove out as their usability case going forward, if not appreciation?
Well, all the leverage games have definitely made Bitcoin and other cryptos trade like high beta tech stocks, to your point, in this last cycle. But that's not the reality. The reality is that Bitcoin itself is a store of value. It is an alternative. It is a monetary instrument that is not issued by a counterparty. And the mistakes that so many in the crypto industry did in the last few years, of which I was quite critical, are to turn this counterparty-less monetary token into something that needed counterparties, and it doesn't. And a good riddance to all of these companies that were the proverbial Icaruses flying too close to the sun. They got burned. Let's flush this leverage and go back to the ethos of what Satoshi Nakamoto designed for the industry, which is leverage-less transactions. And that's what Custodia Bank is built for.
But do we, in an ironic sort of way, need regulation and some level of centralization in order to ensure that decentralized vision can play out?
That's a great question. And I have been pro-regulation with regard to enabling regulation that prevents the fraudsters and crazy leverage players that burned this industry so badly in the last several months from regaining their position. One of the challenges is that the regulators, by slow walking the non-leveraged players, of which Custodia is one, they didn't give the market an alternative. And into that void of the slow walking that happened from the regulators filled all these fraudsters and, frankly, some criminals. And that's the regulators work both with action and inaction. And in this case, I think their inaction caused much greater problems. That was especially true with the SEC, which greenlighted the GBTC as the one and only way that folks could gain exposure to Bitcoin in their brokerage accounts for almost 6 years. And that created an incredible market distortion because it was a closed-end fund that ended up trading at a big premium to Bitcoin. That hurt retail investors, and all these leveraged Wall Street funds could come in and arbitrage that and pick off the retail investors. How was that good for the industry?
We often go from underreaction or too much hands to overreaction when it comes to regulation, when it comes to legislation. So what's the scenario where we thread the needle here and get this right so that the story isn't reacting to 18% APY promises that turn crypto into a Ponzi scheme and is instead giving consumers more power and opportunity?
That's a great question. And it goes back to really what the state of Wyoming special purpose depository institutions were designed for. This is something I've been working on for more than 4 years, to create a non-leveraged depository institution that is subject to bank capital standards and bank regulations. All of the players in the U.S. crypto industry are not subject to those right now. And that's the challenge. I think they all ultimately will be required to be regulated as banks, and that's going to be good for consumers and good for the users ultimately.
Yeah, a lot of people want to buy magic beans. Let's see if they want to buy beans, even if they're good for us. Caitlin Long, thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.